Palantir, there it is. Palantir stock has broken $100 a share. This stock is up to $103.77. Absolutely incredible to see. Based upon my 3,333 shares in the public account, tomorrow I should be up another $66,759 in Palantir, which is absolutely just something to be very thankful for, right? I remember back to when the stock was talked about as a clown stock and it was made fun of, right? And to now be sitting on this sort of gains that we'll be sitting on here is absolutely unbelievable. I want to say congratulations to everyone that is a Palantir shareholder. Congratulations to each and every one of you. I love to see people making money. You know, a lot of people, they get jealous when other people are making money. It makes them feel bad, things like that. I could not be more opposite. I love to see people making money. I love to see you guys hitting new records, being able to, change your lives and go ahead and, retire if you want, or buy certain things that maybe you had as goals, or go on vacations and things like that. Like, it's unbelievable to see. So congratulations to all of you guys. We've got business to get into, though, today, okay? Now, if you've been following me on the reaction channel, Jeremy Lefebvre makes money. What did I tell you guys in that video? I said, if they crush earnings, we'll have $100 incoming, right? And I said, if they do miss, though, we had a major drop coming if for any reason they came in with a miss. Now, if you watch that video, I told you guys I'm expecting them to beat and crush analyst expectations, right? And this company reported some unbelievable numbers. First thing we're going to talk about in this video here today is major changes going on with Palantir. There's very specific things I have to show you in this video that are completely changing Palantir. If we even look at where Palantir was a year ago versus now, it's a night and day difference, okay? And so I need to take you through that in this video and show you some very important things that aren't like the top talked about things in regards to stock. Second thing is, we're going to talk about what am I going to do with my shares here, right? It's a pretty big position for me in the Patreon portfolio here in the public account, 3,333 shares. Am I going to sell some shares off tomorrow? Am I going to sell all my shares? Am I going to hold all my shares? Am I just going to be happy to hold this? Or am I going to actually go out and buy some shares at this point in time? So we're going to discuss all in that video. I appreciate y'all for being here. It's one thing only I need from you guys. Smash that thumbs up button. It's going to be a busy, action-packed week. This video is all dedicated to Palantir because there's so many big things I have to show you in this video here today. But all I need from you guys, smash that thumbs up button, make sure you're subscribed here to the channel. Additionally, if you're looking to apply to join private stock group, I'll put that as a pinned comment down there today. You can click on that, fill in an application, see if we can get you access to all of my best course curriculums: Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, my private Discord chat, which was very exciting today, right? In the Palantir chat, it's always busy. We're always sharing all the news and stuff that's going on. A lot of stuff that people don't see that's going on in regards to Palantir, right? Everybody got an incredible Palantir community in there. But let's be very clear, the past hour in there has been nothing but a celebration. Everybody's just obviously very, very happy because the amount of money that's being made is just obviously astronomically high. Like, some people are making 5 figures, some people are making 6 figures, 7 figures on Palantir stock. It's ridiculous. So once again, if you're looking to join us in there, you love Palantir stock, you want to be part of my private stock group, pin comment, and we'll take things from there, okay? Alrighty, so starting out here on the income statement. Now, this could be a little deceiving, and I'm going to show you why in just a moment here, okay? So first off, revenue looks great. $827 million of revenue compared to $608 million at the same quarter last year. Cost of revenue, 174 mil versus 108 mil. Nothing too crazy there. It's kind of to be expected. I mean, your revenue's up over $200 million on a year-over-year basis. For your, cost of revenue to be up less than 70 million, that's pretty normal. Gross profit went to 652 million from 499 million. So if we just stopped there, like, banger, like this would have been like an A-plus income statement, right? But then we have some issues here. Sales and marketing went to 288 mil from 197 mil. That's a massive increase. R&D went to 171 mil from 109 mil. General administrative, G&A, went to 182 mil from 127 mil. So it makes expenses look pretty out of control, right? $641 million in total operating expenses versus $433 million in total operating expenses in the same quarter last year, which then makes income from operations only $11 million from $65 million. So expenses killed the profitability of the company, right? Now, interest income was even higher than it was at this point last year, $54 million in interest income versus $44 million. They're making bank from the bank, basically. Other income also came in at $14.7 million versus a negative $4 million number in the same quarter last year. So income before income taxes, 80 mil versus 106 mil, which is still 26 mil down year over year. Net income, $76 million versus $96 million, so down about $20 million year over year, right? But it's not really as bad as it looks, and here's why. If you look at stock-based compensation, they're taking a bunch of one-offs when it comes to SBC here, right? It's a lot. Cost of revenue, SBC, 33 mil versus 11 mil, 97 mil for sales and marketing versus 43 mil. R&D was 77 mil versus 32 mil. G&A was 73 mil versus 44 mil, okay? So total stock-based compensation over doubled on a year-over-year basis. Over doubled to $281 million. So this is good and bad in the sense of, okay, so stock-based compensation is a non-cash expense. So it's an expense, but it's a non-cash expense, right? But it does dilute shareholder value. Now, on the negative side here, this is putting Palantir, it reminds you a little bit of Palantir back in the old days. Let's call it prior to 2022. Huge growth rates, but what was the one thing? I mean, there was two things people used to poke at Palantir for back in the day. One, stock-based compensation. That was one of the huge things. And then other than that, people used to say, hey, it's an unprofitable company, right? So we still got profits, and that's good. But the stock-based compensation has gotten really, really intense. There's no debating that, right? So it is something we have to deal with. There is shareholder, dilution going on. There's no debating that, right? Now, here's something, if you're looking to be really bullish, here's something to be really bullish about. The balance sheet of Palantir. You always think, like, can this balance sheet get any stronger? It gets even stronger. Now the company's sitting on over $2 billion in cash and cash equivalents. Marketable securities up to $3.1 billion, which is unbelievable. Total stockholder equity now is well over $5 billion in this company from $3.4 billion at the same quarter last year. That is a fortress balance sheet that Palantir has, an absolute fortress. And this is one, if you think about like what gave me conviction to buy Palantir, back in 2022 when that stock was crashing and it was, $7 and whatever. One of the big things outside of, kind of understanding the product the company had, one of the big things that got it through for me was the balance sheet. Because I looked at the balance sheet, I said, this is a fortress balance sheet, this company. Like, they're going to be able to get through whatever storms they have to get through. And obviously they did. Now, when you look at some of these more in-depth financials, I think it gives you a better picture of what's actually going on with Palantir's business model and the major changes here. U.S. commercial revenue growth was up 64% on a year-over-year basis. You got to be flipping my flapjacks. Oh my gosh. Just on a quarter-over-quarter basis, they grew 20%. U.S. commercial revenue on a quarter-over-quarter basis. So that means not only are there major accelerations going on with Palantir's business model on a year-over-year basis, but the business is accelerating so rapidly that even on a 3-month basis versus a previous 3-month basis, things are accelerating rapidly, which is one of the most, if you're wondering why is this stock going so beast, it's because these numbers are so darn incredible and the accelerations of growth are so rapid, not only on a year basis, but on a 3-month basis. Check this out. U.S. commercial customer count grew 73% year over year. Now, I circled that, and I think that's so important because this is growing much more rapidly than even revenue's growing, which means there's going to be likely a revenue lag here, which will hit. And it's going to be phenomenal. U.S. commercial customer count grew 19% just on a quarter-over-quarter basis. So the amount of people that are interested in Palantir products just continues to accelerate at this point in time. Look at U.S. commercial remaining deal value. That's up 99% on a year-over-year basis. Incredible. U.S. commercial remaining deal value up 47% on a quarter-over-quarter basis. What? Oh my gosh. 3-year U.S. commercial customer count grew 5x. And then arguably the most impressive number of everything I'm showing you right here in front of you right now is this number right here, okay? U.S. commercial total contract value is up 134%. on a year-over-year basis. That bodes very well for Palantir's financials over the next several years. Not just over the next several quarters, I'm talking over the next several years. But if you want to see the thing that is maybe the biggest thing of everything I'm going to show you in this video, look at this here, okay? GAAP net income. Remember I showed you all that SBC. And so it gives a perception that Palantir's got a huge expense problem and whatnot, right? Here's the deal. If you X out those one-time, stock-based compensation there, you would be looking at net income of this company of $164 million, right? Which compares to this point last year, $93 million. So we're talking about the company's true profitability is going up rapidly. Because remember, once again, SBC is a non-cash expense. It does dilute shareholder value, but it's still a non-cash expense. So do keep that in mind, right? Now, GAAP operating income, if you took out the one-time SBC there, $142 million versus $65 million. Tell me if my math is correct. Last time I checked, that's over a double up on a year-over-year basis. Incredible. Now, you want to talk about something that would make somebody really, really bullish? The Rule of 40. Rule of 40 is year-over-year revenue growth plus EBITDA margin. Now, you're not going to hear this talked about really ever unless it's like a SaaS-related company. And this is something people judge SaaS-related companies on. What is your year-over-year revenue growth plus your EBITDA margin? Now, if you're above 40, that is usually seen as good. Like that's like you've got a good, healthy business model if you're above 40. If you're above 50, people are like, you're running a great SaaS-related company. If you're above 60, that's insane. Like, what? How are you 60 plus on a Rule of 40? This is ridiculous. 81%? What are we talking about here? 81%? Palantir's got a Rule of 40 of 81%? Like, this might be the highest number you ever see, or certainly one of the highest numbers you will ever see from one of these sorts of companies. That is ridiculous. Because it's, for a lot of companies, it's usually hard to keep a high EBITDA margin with strong revenue growth. And then companies that usually have high EBITDA margins usually don't have exciting revenue growth. When you can put the two together and you've got banger revenue growth and EBITDA margin, that means your product is that dang special that you can have both of those things at the same time, because those two don't usually go together very well. And that's why this metric is so important when it comes to these SaaS-related companies. And this is just ridiculous, absolutely ridiculous, okay? Now, this is big. I mean big, big. What I'm showing you right now is total revenue growth. We're not just talking about the commercial side of the business. Now we're talking about government as well, right? And we're talking about outside of the United States. The company grew 36% revenue. That's a big acceleration over where the company was growing just in the last quarter. So what we're seeing continually, quarter after quarter after quarter, is Palantir's revenue growth getting stronger, 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 stronger. This is all you could ask for as a Palantir shareholder. This is all we could ask for, is that the revenue growth just gets stronger and stronger. And we haven't likely reached the end yet. Like, I don't know if that's a few quarters from now or a year from now, but the revenue growth probably is going to continue to accelerate here for the next bit of time. And that is so exciting as a shareholder. Like, that's one of the most exciting times to be in a stock when, and if you're wondering, how did Palantir go from $7 to $100? Look at the revenue growth since that time. I mean, at the bottom, Palantir was only growing revenue 12%, right? Then they bumped it up. Then they bumped it up. Next thing you know, they're in the 20s. Then we were talking about, they're approaching 30s. Then they went to 30s. Now we're talking about high 30s. But look at this. Look at this. If you X out the strategic commercial customer contracts, right, and the whole SPAC situation, we're talking about this company's revenue growth would actually be 39%. What is the magic number I told you guys? If Palantir grows this number, then that completely changes the way you have to value this company. What was the number I told you guys? 40% revenue growth, right? I told you if we can start to talk about 40% plus revenue growth for the next several years, then we can begin to talk about Palantir is going to go to 100 plus. And here we are. That is what they've been able to pull off here. We're now looking at a company that revenue is going to likely end up hitting 40% growth on a year-over-year basis or above 40%. And that, folks, is magical. Absolutely magical. There we are. We're doing it, right? Look at this. 129 deals closed of at least $1 million in the quarter. Jeez. 58 deals closed that were at least $5 million. 32 deals closed that were at least $10 million. What an absolute animal of a company. An absolute animal. By the way, I almost forgot. Once I get through all these numbers and I tell you what I'm planning on doing with the stock, we're going to go ahead and react to a bull-bear debate on Palantir that happened on CNBC about an hour ago or so. So I'm looking forward to getting to that one with you guys as well. I forgot to mention that at the beginning of the video. Now, check this out here. The guide is for around an $860 million midpoint for this upcoming quarter. Now, analysts rest $799 million on average. So the moral of the story is the company's going to grow way more rapidly than analysts expect, which means analysts are going to have to bring up all their targets across the board, including, by the way, share price targets. Additionally, they gave their full year 2025 expectations. Analysts were thinking around $3.53 billion of revenue. Companies talking about $3.74 billion to $3.75 billion. So we're talking about a Palantir here that is, we can call it roughly $200 million likely ahead of where analysts are at. And keep in mind, don't be surprised if Palantir comes in and beats those numbers throughout the year. And don't be surprised if by the end of the year, right, the end of 2025, don't be surprised if they end up doing $3.8 or $3.9 billion of revenue and even get close to a $4 billion number. Don't be surprised at all. They're on an absolute roll with this company, right? Now, I know not everybody's going to listen to the conference call and all those sorts of things, but there's this, I think, is the most important little statement Alex Karp made here. This gives you a real good understanding of where Palantir's at and how Alex Karp, the CEO of this company, views the company right now. He says, "We are still in the earliest stages, the beginning of the first act of a revolution that will play out over years and decades. Our total revenue in the fourth quarter last year reached a record $828 million, representing a growth rate of 14% from the prior quarter's total of $726 million and 36% from the same period a year ago. This is not an incremental advance or marginal acceleration of our business. This is a new phase. And the momentum we are seeing across sectors, both commercially and government, is unlike anything that has come before." And the great thing, you know what I love about this though? He's coming with the numbers. It's not just big talk for big talk's sake. Because I do own another company that has another CEO that likes to stick his chest out. But that CEO, he makes a lot of statements and doesn't come always with the numbers, right? Including this past quarter, he made a lot of big statements on a lot of future products and things like that. But that man didn't come through with the numbers. Alex Karp, he came through with the numbers. He's got big statements about what Palantir's doing and where they're going. But he backed it up with the numbers, unlike the other CEO of that other company I hold, right? So, I like that. I respect that. That's big time. It's one thing if you're just talking your game to talk your game. It's another when you come through with the numbers, and that's what Alex Karp did here. Now, let's talk about the ugly part of Palantir. We got to discuss that, right? The market capitalization tomorrow is going to probably be somewhere in the $200 billion to $250 billion range. Now, here's the issue. Palantir is going to likely do revenue less than $4 billion in 2025, which means the forward price to sales ratio on Palantir tomorrow will be trading over 50. That is extremely high. I mean, extremely high. The valuation is absolutely a concern, and it's a legitimate concern. Nothing could be said about Palantir. I mean, okay, what are the only two things, if somebody was to be bearish and talk down Palantir, what are the two things, there's only two things people have to go off of now. Valuation, what we just discussed, and the stock-based compensation. Outside of that, you have nothing. The revenue growth continues to surprise the upside. The EPS on a non-GAAP basis continues to surprise the upside. The margins continue to surprise the upside. The rule of 40 is ridiculous. It's like 81. Like, it's still just hard for me to even wrap my head around. The product's amazing. They're in with the government. They're getting more and more commercial clients. And as I told you guys, this becomes like, it almost like becomes like compound interest. When you have more and more of these commercial customers, it makes more commercial customers because CEOs and executives are always changing companies. And so when somebody's used Palantir's products for their company and they see how great it is, and then they switch to another company that doesn't have Palantir, you know what they start saying? Hey, why don't we have Palantir? Palantir helped my company I used to be at, XYZ, do blah, blah, blah. It's helped save us an extra $30 million a year, and we spend $7 million a year on the product. Why don't we get that in here? Boom. That's how your product goes more and more viral, and that's how Palantir ends up becoming just a massive ecosystem player in the whole entire S&P 500, right? In all the Fortune 500 companies, and then maybe even working downstream over time. So we do have valuation problems, though. There's no doubt. That price to sales ratio is ridiculous. And then, you know, you can't even really discuss a company on a forward P basis, because when you're trading at a price to sales ratio of 50 plus, I mean, your forward P is going to be just astronomically high. That's a concern. So what am I planning on doing with my Palantir shares here, okay? And then we'll go ahead and react to that bull and bear debate there. Here's my plans, okay? If this holds $100 plus, I'm planning on cashing 333 shares of this one. So if this holds 100 very well tomorrow, and you know it's trading throughout the trading day, 102, 104, 106, 110, something like that, I'll cash 333 shares, take a little more profits. I do have some other opportunities I see in the market that have very, very attractive risk-reward profiles that I would like to deploy some money into. So I would go ahead and do that, right? Now, the higher Palantir goes from here, the more profits I will take on Palantir. The risk reward as the stock goes higher and higher gets eroded. That's just the way it works, right? You know, at the end of the day, the numbers are great, but the valuation just continues to climb, which, you know, if this valuation continues to climb, then even 40%, because here's the thing, now we're at a place where, you know, now that the stock's $100 plus, now we're going to have to start talking about revenue growth of 45% or 50%. We got to continue to like push these numbers, and at some point in time, Palantir finally won't be able to hit the numbers everybody's projecting as the stock goes higher. So let's say hypothetically Palantir went to $200, right? There's 100 now. Let's say it goes to 200. Then we're going to be talking about people are going to start expecting 60, 70, 80% revenue growth for Palantir. At some point in time, the story breaks because the revenue growth rates just become so ridiculous that people start to expect the Palantir could never live up to that sort of ridiculous numbers. And then you get a massive crash in the stock, and you get a stock that, you know, is down for several years, essentially, okay? And so that day will come for Palantir. It's hard to predict when it's going to come because they just keep accelerating the revenue growth. But it will come eventually. And so that's why, for me, I'm like, okay, let me take a little more chips off the table here. If the stock also goes to 125, 150, 200, I'm going to have to take more chips off the table, right? Because the risk reward eventually just starts getting skewed where it's just like, oh my gosh, like, you know, I could always see this company getting back to 30%, and I could even see them getting to 40% revenue growth. Can I see them growing 50% plus? That starts to get really hard for me to see that. Could I see them going to 60 or 70% revenue growth? I have a difficult time believing that. I would gladly welcome that as a shareholder, but that's very difficult for me to kind of go there, okay? So that's kind of what we're looking at Palantir. I could not be a more happy and proud shareholder. Holy smokes, this ain't no dang jokers. Let's go ahead and react to this bull and bear debate around Palantir, which is funny because the bull, Dan Ives here, you know what his price target is? $90. That's, you know, when these guys put on a price target, it's a 12-month price target. And here we are tomorrow, the stock's likely going to be trading 100 plus. So we're going to likely be even ahead of a bull like Dan Ives' numbers here, which is crazy to think.
On the other side of this debate, though, is Brent Thill. He's tech sector lead at Jefferies. He has an underperform on Palantir and a $28 price target. It's good to have you both here. And Brent,
By the way, I usually just reserve reactions to my reaction channel, Jeremy Lefebvre Makes Money, but I thought this would be such a great reaction to put into this Palantir overall video and kind of hear some different folks' perspectives on the quarter.
I'm going to start with you because in the shareholder letter that Alex Karp puts out every quarter, he basically called this a new phase as AI adoption accelerates and with it sales growth, which is what we're seeing at Palantir. And I spoke to Karp and he said it to me like this. He said, quote, say you're a PE company, you acquire a large insurance company, and you wanted to change the cost of revenue, meaning how can you have fewer people doing the same amount of underwriting and have the same number of customers? That was a multi-year project, like 3 to 5. Now it's a 1-quarter cost that's completely different. And if you do it and the company down the street doesn't, you're going to have very different margins and very different revenue. And then he goes on from there. But we've talked about,
and that's the huge point. That's why I talk about it as like it's almost like a compounding interest and a snowball, where he talks about, you know, if another company doesn't do it. But here's the thing: the other companies will do it eventually over time. Why? Because salespeople change companies all the time. Executives change. Other board members change. Board members, right? Like all these companies have board of directors. All these large companies. And so board of directors of this company over here is like, oh yeah, you know, I'm the board of this company over here. We're using Palantir. It helped us in this way, this way, this way. They start talking to the CEO about it, right? The other board of directors, and it's just like creates this like virality of a product, especially in kind of the SaaS space. And it's just like, it just sets up Palantir so well for many, many years of very strong revenue growth.
For a while now, that 2025 could be the year where you see this application layer actually take effect and you see corporate America begin to realize the benefits of the investments they've made on AI. Palantir seems to be very far ahead based on the earnings we just got. Does this change your thesis?
Look, they've had great fundamentals. I think this is a question of valuation. Again, you'd have to grow 5.
Oh, shoot. He's got a $28 price target on it. Oh, dang. I didn't know he was that bearish. Dude, that's tough. That's tough. $28 price target and the stock's trading $100. Oh, that's tough. That's tough.
Row at 50%.
Palantir seems to be very far ahead based on the earnings we just got. Does this change your thesis?
Look, they've had great fundamentals. I think this is a question of valuation. Again, you'd have to grow 5 years in a row at 50% and the stock would still trade at 15 times revenue. So it's not that we're arguing the fundamentals. Kudos to them and great call by Dan on the stock. Our view is more about liking other names. And remember, 50% of this base is retail and insiders. There's no other software company like this. It's the lowest asked about question of any institutional investor because barely any institutional investors own it. And so I go
back. So a few things there. Few things. Okay. One is he makes a completely fair argument around valuation. You can't debate that. Like it trades at extremely high multiples, trailing 12-month P, forward P, 2-year forward P, like we show on 1000X, right? I mean, it doesn't matter what metric you want to look at. It trades insanely rich, right? Price to cash flow, like it doesn't matter what you look at. It trades very rich. Completely fair point by him, right? Can't debate that. But he talks about like institutions, you know, aren't really interested in one, they hardly own it. If anything, you could say more and more institutions and big money are going to be more and more interested in buying Palantir stock over the next year, 2 years, which then you could say leaves a lot more upside ahead, right? So, I mean, you know, that's another way you could look at it here, which is pretty intriguing from the stock price perspective.
We've all seen what happened to Snowflake at 50 times revenue. We've all seen what happened to Datadog and others. And maybe Palantir is different. Kudos to them. And I agree with you. It's getting to the application layer and they're in a great spot. So I'm not sitting here attacking the fundamentals. Fundamentals are great.
Yep.
Ours is largely focused on the stock and looking at what's happened to investors in the last 20 years when you chase things at 50 times revenue.
Yeah, that forward P is no jokers. That's no jokers, right? That's a holy smokus. 216 forward P. That's his point's fair. That's the thing, right? Like you can't say it's not fair. Like it does absolutely trade at extremely high multiples.
It doesn't end well, and none of them have. So
okay.
I think part of it's we're just scarred from that, and maybe we're totally wrong on that. And so I acknowledge. We're wrong, but I also acknowledge like you got to look at the history and look at the fundamental analysis. So that's kind of what we're sticking to right now.
Dan.
So will Palantir stock crash? The answer is absolutely. Eventually, Palantir stock will go through a major crash and the stock will do around 40, 50, 60, 70%. Right? And then it's going to be a climb back that's going to likely take years to get back to where it used to be. But predicting exactly when that time is very difficult. And I don't think that time comes until either you get a full-blown stock market crash and like total risk off in the market, right? Or you get a situation where the revenue growth rates have peaked, right? And then that revenue growth starts to decelerate. Once you get to that point in time, I think that's when Palantir stock starts to be very, very challenged. But once again, when do we predict that's going to happen? Could that be next quarter? Could that be 3 quarters from now? Could that be 6 quarters from now? And that's a tough thing, right? And in the meantime, you could see more upside potential there.
I want to get your response to that because valuation has been raised by a number of folks here. One of the other things that came up in my conversation with Karp is the fact that, this is how he put it, he said, we don't have the right jokes, the right suits, the right steak dinners. We're never exactly the right people at the right time, unfortunately, and that's probably the biggest limit to our growth. Wrong people, wrong time, but right products.
Yep.
Sort of getting at this idea that they tend to be contrarian and that they don't have a marketing team, and yet they're growing. You've called it the Messi of AI, but the Messi of AI does look expensive based on some valuation metrics. Is it right for a pullback here?
Hey, but to be fair, Messi's also expensive. You can't get him to play for cheap, right? Same thing with Ronaldo. No, those guys don't play for cheap.
Look, I think this was a historical quarter. And ultimately, look, the Bears, they were bearish at $10. Hated 40 and despised it 100, right? And I think they can see AI in the spreadsheets. When we do the checks...
Oh my gosh, RBC has an $11 price target on Palantir. $11? I mean, people should have just done more study on the business model and the product. I think that's like if they would have just done more study on the product, I think they would have... I don't think they would have $11 price targets on the stock. Like, that's just ridiculous.
Done for Palantir. I think it's the next Oracle, it's the next Salesforce. I think this is a company, when it comes to AI revolution, this is really front and center is what's going to be one of the huge beneficiaries there.
Do they need to pull the marketing lever here? Do they need to build out that team, or it's not necessary?
I think the scary thing is, with no direct sales force and basically more inbound, this is what they've done. In terms of what these types of numbers, you start to look out the next 3, 4, 5 years. I mean, I think this is ultimately, this could be a $1 trillion market cap when we look out for the next 2, 3, 4 years. As Brett's talked about, I mean, institutional has obviously been very negative on it. But as we've talked, I think many have missed the biggest historical growth names the last 20 years because they focus on valuation.
I'm going to try to get to both of you quick, but we got to be quick on the answers. Brent, is Palantir Tesla or nvidia here? Tesla, where fundamentals don't matter because the personality of the CEO is just so big, or nvidia, where it might look expensive now, but next year it's going to look cheap because of the fundamentals?
It's Tesla right now.
Okay.
No. I mean, again, you can't go back to any history.
And keep in mind, I own both stocks. Tesla made me more money than I could ever imagine, and Palantir's made me a good deal of money, right? Not as much as Tesla. But the moral of the story is, and I'm kind of like, poking on my own kids here with my stocks, right? But here's the difference between Tesla and Palantir. Tesla numbers have sucked. Point blank, period. Palantir numbers have anything but sucked. They've been nothing but amazing. And so that's the key difference. And that's why I don't think it's fair to call Palantir Tesla. I think it's actually disrespectful to Palantir to call them Tesla because they're coming through with the numbers. Elon's not coming through with the numbers. Elon's coming through with, hey, we're going to sell 1 million robots. We're going to we're going to have Optimus. We're going to have, we're dominating self-driving, all these things, right? Maybe some of that true, maybe some of that won't come true, blah, blah, blah. But the moral of the story, that's all like, we hope to do something someday. The numbers aren't good. Automotive revenues is down 8% year over year. Palantir, last time I checked, none of their numbers are down. They're skyrocketing. And so it used to be a huge compliment, I think, to get put in the same sentence as Tesla. I don't think it is right now. I think it's disrespectful to Palantir. I really, really do. And that comes from a Tesla shareholder, right? And a Palantir shareholder.
Company that's ever sustained it. So again, if they can accelerate growth and keep it, then we're wrong. But it would be the only company in software that I've covered for 25 years that would maintain that.
Okay, Tesla's not bad though. Dan, is it Tesla or NVIDIA?
Look, I'd say it's Tesla with a little NVIDIA, and guess what? That's a cool club to be in. And when it comes to Tesla, I think this is Tesla in 2015, 2016, where I view Palantir.
Okay. Just as long as it's not Tesla in 2023 or 2024, a brief period of time, when maybe Alex Karp needs to buy Twitter.
And again, but again, you look at Karp, you look at Musk, visionaries.
Yeah, visionaries, big personalities too. All right, Dan, Brent, thank you. Time for a CNBC News update now.
So you see what I just did there? I just broke it down for you guys. We went through all the numbers. I showed you the major changes that are happening with the business model, right? And I did it all fairly. I didn't just come out and just, say the stock's going to go to billion and trillion and gazillion dollars, right? Broke it all down. Here's what we're looking at. Here's what's going really good with the numbers. Here's what could be going even better in the future here, right? Here's where the valuation's at. And here we are. My reaction channel at some point this year is likely going to hit 100,000 plus subscribers, which will be my 5th YouTube channel to get a silver play button, which is I'm super thankful for. And if I think about the success, I think a lot of it has to do with that sort of fairness around companies, where I can show you what's good, what's bad. I don't just look at it one-sided and just say, to the moon. I look at it, here's a fair assessment of what's going on here. Here's the risk, here's the reward, here's the potential, boom, right? And I thank you all for being here. And I hope you always enjoy that and really respect that. And I'd say 99% of my subscribers respect that in a huge way. Maybe 1% don't respect that and they just want me to, come out and say nothing but positive things. But for most of you guys, I know you guys absolutely love that and you really respect that on a high level. So appreciate y'all for being here. If you're looking to apply, join a private group, that will be pinned comment down there. You click on that, fill out an application. We'll see if we can get you access in there with us, the Palantir chat, SoFi chat, all the different chats. As well as access to all of my best course curriculums. See if we can get you access to that maybe a little later on this week or maybe over the weekend, okay? Alrighty, guys, much love and have a great day.